Let's talk to Russell Lynch. He's the Deputy City Editor of the Evening Standard. Russell, nice to see you.
Thanks.
Right, let's go through a few press headlines that I read over the Christmas period. Okay, love to see just one or two sort of comments on each theme if you agree or strongly disagree. UK economy defies the gloom mongers to grow even faster. That was just going into Christmas. The UK economy is in a pretty good place, right?
It is, and far be it for me to sort of cast aspersions on maybe the one-eyed view of Her Majesty's Daily Mail, but yes, the UK did defy the gloomsters, but you only have to look at the rest of the world economy to realise that they're doing a whole lot better, and we're missing out on that because of Brexit. So, I would take that one with a pinch of salt, frankly.
Okay, so Brexit Britain ends 2017 with a boom. FTSE an all-time high, 141 billion lift for shares, deal making a 3-year record high.
Yeah, an interesting headline. Again, defined boom. FTSE 100 at all-time high, but yet the pound has suffered. So obviously the FTSE's international earnings are great. The 141 billion lift for shares, maybe, but deal making at a 3-year record also comes from the fact that UK assets are cheaper and more attractive to overseas buyers, for example. So maybe not. Okay,
so the most hated bull market, why the city is fretting over 2018 despite the highs. Are we fretting about 2018?
I think we're probably fretting a little bit less than we ought to be, but there's some big fund managers in that piece, and they're worried. I think the problem is that it's more that we're seeing all the reasons why we think the market might be overvalued, but then you look at the other reasons, like central bank, low rates, lots of liquidity, tax cuts, etc., recovering economy. But it's just more a question of how long the good times can roll.
Well, I think that goes into the next headline, the end of December. Is the great US stock boom about to end? Extraordinary returns on capital employed last year. Yeah,
and if you look at the figures, I think it's something like 400 days since the S&P had a 5% fall, which is it's like the second or third longest run in history. I think it all depends, frankly, on whether we see inflation, because inflation seems to be the tamed beast at the moment, but apart from the UK, because the pound's fallen in Brexit terms, but in the US, if you see inflation in the US, that will mean the Fed will start raising rates more than the 3 times that they're forecast this year, and then that's when that stock boom will
come
be
to
driven.
an end.
Yeah.
Okay, and I've got to wrap up with a piece that you wrote this week. UK manufacturers bring New Year cheer as weak sterling gives exports shot in the arm.
Well, it's based on revisions to the data. Everyone has been scratching their head a bit since sort of late 2015 about why UK manufacturers didn't seem to be exporting more. But lo and behold, the ONS has gone back to its data, rewritten history. It shows exporters, we've actually been exporting more and gained a lot more from that depreciation of the pound. The caveat with that is obviously manufacturers are still only 10% of the economy. So it's good news for manufacturers. But for the overall economy, we still need the consumer firing on all cylinders.
So, final thoughts. Big city bonuses for the bankers this year?
It depends, because you look at some of the figures from some of the big banks this year. The likes of the Goldmans, the fixed incomes boys have been struggling. It hasn't been great guns, and I've been reading reports about the dreaded donuts been hitting a lot of players in the city this year.
Right.
So. Yeah, you've got a low volatility, low bond trading. M&A wise, yes, there may be some big deals flying around, some big bonuses, but I can't see it really on the trading front. I don't know, there may be swings and roundabouts, but a few disappointed people staring at their envelopes this year. I don't get a bonus, so I don't care.
Right, on that note, we'll leave it right there. Russell Lynch, the Evening Standard, thank you very much indeed.